Well, Dave Nelson, great to have him in studio with us today. You got together with the family up north, and you guys had a great time.
Had a great time, yes. Thanks. I was kind of a rare, everybody's older, what have you. You got 5 kids and then 13 grandkids and, various sports and what have you. And again, I got to be careful on how I word. As a coach, I kind of view things maybe a little differently than now. But anyway, it just it was a riot. It was really a good time. Everybody made their way up there, and we've got a place a little north of Minneapolis, about 3 hours north of Minneapolis, and so it's a long jaunt. 8-9 hour drive as far as to get up there, but it's right on the water. Really nice place and just relaxing, I guess, to say the least. And it was, great having the kids, the grandkids, and spent a lot of time with them. A lot of fishing took place, and a fair amount of activities as far as on the water took place, tubing, that type of stuff. So it was a great time. Very, very fortunate.
You are, of course, in a very high-stress job.
Yep.
Do you really get the opportunity to decompress when you're up there, or do you still check in on how things are going?
Daily, yes.
I knew you would.
Yes. One of the trips I took years ago was a fly-in fishing trip up to Canada, and you have no contact as far as, and that was really good. And it was hard for me as far as the first several days. Then I got to a point where I just said, this feels good as far as not to have to. But yeah, it's, we have a lot of responsibility as far as, and I take it very, very seriously as far as, people's futures are to some degree in our hands. We got to make good decisions. And so we've, again, the last 3, 4, 5 years, we've been very fortunate as far as the decisions that we made on behalf of clients that have turned out really well. Markets are, always dynamic. They're changing constantly. There's all kinds of variables that come into play. I've done a few call-in segments as far as on TV here recently, and what are you thinking now? We're hitting all-time highs, and we can drill down on a whole bunch of this stuff later on if you'd like. But yeah, it's exciting in many ways. I mean, I run into clients. Literally, I had one the other day at Jewel, at the grocery store, and keep up the good work, and they're thrilled and excited. Everybody's cranked up, and things have worked. But as things go higher and higher, I'm sitting there saying, okay, what can go wrong? And that's our job. Our job is to worry on behalf of our clients so they don't have to. So there's a lot of worrying that's taking place. When things are down, I get more excited and people think you're nuts. We made a buy as far as 3-4 months ago, I guess. Now time flies when you're having fun, but it's worked out great. I mean, we sold at the end of last year. That created a lot of tax liability for individuals, but the trade-off was we were able to enter into stuff, and net people were ahead in a big way. So it was good. It worked out great, but again, they don't always work out that well.
It's interesting what you were talking about there. You'd appreciate this. I was listening to the Dan Patrick show, and he had Bill Cowher on, the former Steelers football coach.
Sure.
And Patrick asked him about, is there any game that still haunts him? And he was saying, it's unusual, but coaches do dwell more on the losses than on the big wins.
Yes.
And as you pointed out, things are going well, but you're still thinking what can happen.
Yes, exactly. And again, going back to what's at stake, as far as if you mess this thing up. And I have a real pet peeve. I know I've chatted about it here in a lot of different places. I bring it up that the idea of that when people look at 10-year and 20-year average returns, they kind of poo-poo it distorts the variability that takes place within that period of time. And so within the last 10 years, within the last 20 years, how many drawdowns have we had that have been 30 and 40 and 50%? If you were in the NASDAQ and you invested in that particular index back in the year 2000 and you bought the very top of the market in the year 2000, it took you 16 years to get your money back. The market dropped 82%, that index dropped 82%, and it took you 16 years just to get back to where you were. we don't have clients as a whole that can withstand that type of blow. I mean, they get, hacked, hammered as far as in a big way like that. They can't withstand that type of assault. And so our job is to try to take that 82% and keep it to 10% or 15%, and that's basically the our role that we see our role as, and we try to convey that to clients. But we've been in an environment where things have worked and worked pretty well, and I think people kind of trivialize as far as what potential is out there as far as for risk. We forget, you go back to the year 2000 through 2002. Peak to trough during that window, the market was down right at 50%. It was just a tad bit below. Then fast forward, so that's 2002 or 2000 through 2002. Fast forward just a few years to early '07 through early '09, we're down 58% on that doozy. So point being, people have kind of forgotten about that. And again, maybe that's a good thing because they can block it out and they close their eyes as far as to what's taking place. But we find that when you lose that kind of money, it takes you so long just to get back to where you were. And so, again, our objective is to try to, when people are really getting excited, this is the Warren Buffett type view, when people are really getting excited, I'm getting nervous, and vice versa. When people are really nervous, that's the time to probably enter, start buying. And that's pretty much the way that we try to manage money and try to take advantage of that. So there's periods of time that are unpleasant. I mean, don't get me wrong. I mean, we've had drawdowns, but if we can take a 50% drawdown and keep it to 10 to 15%, you can probably make up pretty quickly. 50% is going to be really tough.
Getting busy with Dave Nelson. We're going to go to the bottom of the hour. Interesting listening to you, and again, you guys do such a great job down there. And I know you spend a lot of money to have these different instruments that
Yes.
you can work with, but do you still go with kind of a gut reaction every once in a while, David?
It weighs in. You try not to have it weigh in too much because typically it's the buy is what's really difficult as far as to re-enter. Selling is one thing, and people talk about it. We'll have people periodically, and I guess one comes to mind. This was 20 plus years ago. It's an executive from John Deere that this was the first meeting. And so anyway, we were talking about as far as, the movement as far as in the Deere stock. And he was telling me as far as that, made a great trade as far as sold out here, blah, 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 blah. The stock dropped, so much, et cetera, et cetera. And then I just let him go for a little while. And I said, and then when did you get back in? And the answer was exactly what I expected. I haven't. So it's one thing to avoid the down, but now you have to have the courage to re-enter, and that's a difficult decision because again, when you're re-entering is typically when other people are finally selling, and so you're looking to try to exploit that little movement as far as that takes place there. My last coursework that I did at the John Kennedy School of Government at Harvard, basically that session was all built around exploiting other people's mistakes, and so when people understand that Wall Street is a big auction, if you want to buy XYZ company, somebody else has to be willing to sell it to you. The shares just don't fall out of the sky. Somebody else owns it, and they're going to put it out there and allow you to be able to buy it from them. So we've got one entity that's going to be right and one entity that's going to be wrong. And we want to obviously always be on the winning side, but it's difficult because the people that are looking at selling, are probably pretty sophisticated as well, maybe pretty smart, and you think you're pretty smart. So again, in the world that we exist in on a day-to-day basis, you're basically competing against other really smart people that also have resources, and so yes, that gut comes into play. And man, it is tough. This last buy that we made as far as 3-4 months ago, my gut is saying there is no way I want to re-enter as far as and put money at risk at this point in time. I'm glad we ignored that because most of those individuals are up 8 to 10% as far as in that period of time. So it's tough to block it out. The tools basically have no emotions. We have emotions, and sometimes they're right, sometimes they're wrong. And again, the tools are going to be right more than David's going to be.
Yeah, well, come on, you're
Yes.
pretty good. We're going to take a break for the weather. More with Dave Nelson here on Financial Focus. Our weather update brought to you by Addington Place.
Our Wednesday temperature pattern getting a little bit more toasty as we head into the afternoon. Abundant sunshine and just a touch more humidity. We'll see temperatures climb to near 90 degrees today under a mostly sunny sky. For tonight, mostly clear to partly cloudy, a little bit warmer. Temperatures dropping into the upper 60s. With your Storm Track 8 weather impact forecast, I'm meteorologist Andrew Stutzky.
Right now we're into the upper 70s. We'll approach 90 today. Our update brought to you by Addington Place. At Addington Place of Clinton, their all-inclusive memory care means peace of mind for families. No surprise fees, just compassionate, personalized care. They provide 24-hour nursing, daily grooming and bathing assistance, secure outdoor recreation, engaging activities, and 3 freshly prepared meals a day, all included. With a blend of holistic and science-based approaches, they support seniors living with Alzheimer's and other memory challenges in a safe, enriching environment. Call 563-219-7237 or visit addingtonplaceofclinton.com to schedule a tour. Addington Place of Clinton, where every moment matters. Visiting now with Dave Nelson. Always enjoy talking with you. You touched upon a little bit about this. I want to talk about the competitive nature of your business, because you like you say, one guy thinks he's smart, the other guy thinks he's smart.
Yep, and it is. I mean, and you have that on a local basis, as far as people that like ourselves, as far as that are out here in, as we call it, in the field, versus the other individuals that are in, say, Boston, which is again a hub for a lot of really, really smart people as far as that manage mutual funds and things of that nature. Some of the biggest name mutual funds that, again, I got to be careful on what I say there as far as rattling off names. But at the end of the day, it's competitive, and you got a lot of smart people that have degrees and what have you. And it goes back to what you brought up earlier as far as does the gut come into play sometimes as far as in making some of these decisions. And to say it doesn't would be a lie. To say it has significant input would also be a lie. So it's finding that balance between 40 years of basically trying to oversee big blocks of money as far as, and I just keep going back to, and I want to be careful on this as far as how it's presented. Our largest account is in Wyoming, and it's a billionaire. And then we have one in Iowa City that's give or take 100 million. And beyond that, the average person that we work with is probably has a few million. So as an office, but whether the person has 100 million or whether the person has 50 grand, it's important to them, and we got to get things right. And so trying to understand what they're trying to accomplish is oftentimes one of the most difficult things, because again, as I brought up earlier, people kind of trivialize as far as the downside. We want to focus on the upside. The client does. We want to focus on in our office the downside. What can go wrong? You take an incident like New York City when the planes went into the towers many years ago. That was an event that nobody can control. That event, in hindsight, lasted a relatively short period of time, but it could have been much worse. And so a lot of the people that we work with need monthly checks coming from their investments, and subsequently, again, if we are kind of trivialize it, we are asleep at the wheel, they're asleep at the wheel. Bottom line, they could be in deep trouble as far as financially, not being able to pay bills, et cetera, et cetera. So we take it very seriously, but yeah, it's competitive. I find myself, people that know me, I think, realize that, I'm pretty confident as far as in what I do. I think most people, hopefully, in our industry are. But also that I'm humble from the standpoint that we've been wrong and we'll continue to be wrong periodically going forward. The key is when you're wrong, are you wrong in a significant way? Something that can impact people in a big, big way. So Jay came along. That's one of my son-in-laws. He's been with me 15 years. He's beyond brilliant as far as just in a lot of areas. And I'd say he's 10 times smarter than me, and I believe that. But he would challenge me on a regular basis as far as, are we not allowing clients to take out as much money as maybe they're able to, as far as, in other words, on a monthly basis. We kind of talk in terms of you should take out this much percentage-wise, and if you go over that, you're probably, going to have problems as far as down the road. And so we bring this up to people, and again, everybody kind of, buys into the idea. And he's saying, well, maybe we should have allowed people to take out more. And I said, well, again, what keeps me asleep at night is that the statistics relating to if you make it to 92, and if it's a married couple that are 65, one of them probably will, maybe both. My dad's 92, my mom's 89. So at the end of the day, they may be the exception to the rule. But my point is here, at 92, if one of those individuals makes it, statistics say that family will be broke. They'll be out of money. That's what keeps me awake at night. And people say, hey, I'll never make it to that age. My dad died at an early, my mom died, whatever. I just let that go in one ear and out the other because I don't want to hear it. My concern is that they live a long time and they run out of money. And that happens for many reasons. People say, well, as you get older, you don't spend as much. That's hogwash as well because, again, when people get older, unfortunately, the doctors... we show up at the doctor's office a lot more than we used to. So the expenses, you'll hit a low at some point, but as you get to those other end, like my dad is a good example. Probably never went to a doctor most of his life, but as he's gotten older, man, he's in there on a pretty regular basis. We've had a lot of incidents as far as with that. So point being, we want to make sure that if a person lives a long time, that there's still a check showing up in the mailbox as far as for them, as far as to pay some of their needed type expenses. And that's a really important thing. And again, I have a few clients that like to refer to me this way, and I'm not real crazy about it, but it's probably accurate, and that is Negative Nelly. So Nelson last name, Negative Nelly.
Okay.
And I say, my job is to do the worrying for you, and so you don't have to. So it's an important job, and again, we take it very, very seriously.
You brought up Jake, and I want you to expound upon this a little bit. There's got to be a check and balance kind of a system in what you guys do. I mean, I'm sure you get together weekly, maybe daily,
Yep.
as a group.
Agreed.
The core group, and talk.
Yes. Yeah, it's really, really important. We've got a lot of really smart people as far as that work at the office, and to ignore as far as their opinions and their insight would be a big mistake. We do an enormous amount of reading every day. And again, as we tell clients, we're the filter so that clients don't have to do that. We'll have people periodically that'll come in off the street and they want to chat. And, I heard this on CNBC, or I heard this on Bloomberg, or I read this from whatever publication. And what we try to do is, as nicely as we can, say, when you turn off the TV, what do you know now that you didn't know when you turned it on? Because, again, a lot of what takes place there is to just keep people tuning in, and it's not necessarily actionable type items that are being discussed. And so our job, again, is to sort through what are you trying to accomplish, when do you want to retire, how much you're going to need as far as per year, what's the absolute minimum that you have to have coming in, what's the desired amount, and you go through this stuff with people. Just like yesterday, I was down in the Quad City office, and I had a woman that she has 4 properties that are close to Augie College, and she just works her tail off maintaining those. In addition, she cuts hair. Has a beauty shop, and she's just working her tail off and really not getting ahead per se. And so as we wrapped things up yesterday, she said, what's the next move? And I said, the next move is for you to go home and think about everything that we went through here. We're talking about making major decisions, and this isn't something we're going to make today as far as you need to think about some of this stuff. And so when we chat with people, oftentimes that's the case. We're going to brainstorm. We're going to throw out different ideas and concepts. And again, we want you to go home. We want you to think about it. And at the end of the day, we'll make better decisions as far as that. Because these aren't our decisions. These are decisions we're helping the client make for themselves. It's really important that we get it right.
Always great to have you in. We got about 5 minutes left in the program. It's summertime, but yet it seems like things are still pretty active.
It is, and with all of the concerns as far as about tariffs, as far as what's happening in Washington, are we going to get an agreement as far as from the House and the Senate, as far as that we can put on the president's a desk to sign? What's going to take place there? If that does take place, what does it mean? One of the scarier parts, I think, is centers around health insurance as far as what's happening there. There is a massive amount of change that's taken place. You've got insurance companies that are pulling out of various markets. You've got the Obamacare, I guess, is that I'd refer to it as. That's probably not going to look even close to what it looks like today. Who does that affect? How does that affect them? I mean, it is a lot of stuff that's taking place today. And yes, this is generally the lull. This is when we type of people in our industry can usually sneak out and get a week here and a week there as far as a little vacation time and not have a lot going on. But that's not the case right now. There's a whole bunch of stuff, decisions that need to be made. And again, decisions being made on facts, not on somebody said this or somebody said that type thing. We need to have data and again, understand what's taking place to be able to help advise people in some of these areas. And there's too much uncertainty right now. People say, well, what do you think's going to take place? And again, really doesn't matter what we think. Let's wait until we know what's coming out, and then we can make decisions accordingly.
So how important is this decision going to be?
I think as far as the Washington decision, I'll move the tariffs aside. The tariffs could impact a person's net worth statement in a pretty big way, positively or negatively. And I think the way the market is being priced right now, I think it's more negative possibility than positive possibility. So that's that one. So be careful there if you're listening in and not sure what to do. Just be careful, because there could be some. I mean, the market's just been almost too good, and it's concerning. So be careful. Now, as far as the other stuff is concerned, taxes, we don't know what that's going to look like. That's a big item. I mean, again, I don't think most people understand as far as taxes, and I think most people don't even want to try to understand taxes. But one of the things that people, I think, are missing are some of the opportunities that are in the code right now that probably are going to stay. And that is, you can make a fair amount of money, and you can have an asset that you own that qualifies for capital gains treatment, and you could ring the register, as we say. In other words, cash that thing in, have a decent gain as far as in it, and potentially be at a 0% tax bracket. Yeah, but I really like this investment. Well, you turn around and you buy the sucker back the next day. You put it on your tax return, so now you've cleaned the slate on that gain at a 0% bracket, and now the next day you turn around and you buy that same security back. So it's a proactive move that's out there that people could take advantage of. Now keep in mind, and I'll qualify this right now to make it clear, this doesn't apply to like an IRA or a 401k. This does apply to after-tax money. And so there's things that can be done. I think that stuff is probably pretty safe. But again, this Obamacare type discussion, that applies to a lot of people that want to retire at, say, 62. They got to make their way to 65 as far as to qualify for Medicare. They've got that window, and this has been a nice little opportunity for them as far as that 2 or 3 year period as far as Obamacare. And again, that may or may not be the case as far as going forward.
Well, try and get a good night's sleep.
I will. You too, buddy.
Yeah, I will.
Always good chatting with you.
All right. Thank you so much.
Financial Focus is a production of NelsonCorp Wealth Management in Clinton and Davenport. The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. Any indices mentioned are unmanaged and cannot be invested into directly. Registered representative, securities offered through Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Investment advisor representative, Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and NelsonCorp Wealth Management are not affiliated. Cambridge does not offer tax advice. For more information, visit our website at www.nelsoncorp.com.
This is the